Welcome everyone, and thank you for attending today's Jindalee Lithium Investor Webinar. I'm Nicola Gazzatti from Investor Relations Consultancy Corporate Storytime. Jindalee Lithium is a pure-play lithium company focused on the development of the McDermitt Lithium Project, which hosts the largest lithium deposit in North America. Today, I'm joined by Jindalee CEO Ian Rodger and Executive Director Lindsay Dudfield, following yesterday's ASX announcement that the company is seeking to raise up to $6.7 million to allow Jindalee to progress work at the McDermitt Lithium Project. Ian and Lindsay will be providing us with an investor update, which we will then follow by a Q&A session. So without any further ado, I'm pleased to hand over to Ian and Lindsay.
Thanks, Nicola, and welcome everybody. Thanks for joining the webinar today. We were hoping to cover sort of three key areas today. One is to provide an update on McDermitt and our progress more broadly. Secondly, obviously run through the capital raise announcement yesterday and then the near-term catalysts that we expect to convert in the next sort of 6 to 12 months, and then provide an opportunity for shareholders and investors to ask any questions. With that, I'll move through our slide presentation. Forward-looking statements, and onto this. Wanted to start this slide off. The investment thesis for Jindalee really hasn't changed despite the softness in the short term lithium market. The long term fundamentals remain intact. Reputable market research firms have Benchmark and Woodmac both have long-term forecasts, 3 times the current spot levels. And furthermore, from the asset side, we've continued to de-risk McDermitt. The test work announced thus far this year has really demonstrated high recoveries. And in our PFS, the early insights from the PFS really give us confidence that McDermitt will be a large-scale competitive source of lithium chemicals over multi-decades, and really confirming our thesis as a emerging tier 1 generational asset. The US remains committed to developing its domestic critical minerals supply chains. We've made progress on a number of those fronts that we'll talk to a bit more in this presentation. And lastly, we've got a really exciting 6 to 12 months ahead of us, including producing lithium carbonate from our test work, completing our PFS later this year, as well as updates with regards to engagements with US agencies and strategic partners. With that, I'll move to the next slide. Look, our share price has obviously been beaten up. We're not alone in that regard. The lithium market's been quite soft over the last sort of 6 to 12 months. Our closest peer in Lithium Americas has been off 60-odd% since mid-April, despite winning a major commitment from significant funding from the US government. Despite these headwinds, we've maintained capital discipline that's reflected in the capital structure. Very tight structure, 60-odd million shares on issue before this raise, and we've been disciplined about how we've committed our spend. And the other point I wanted to draw shareholders' attention to on this slide is we've been picked up under coverage by MST Financial. Their analyst Michael's report, I would encourage people to read, lays out in quite an amount of detail the thesis behind Jindalee, and despite his highly risk valuation, really points to the upside in the company. I'll skip over the next 2 slides. Existing shareholders will be familiar with this slide. One of the key value enhancement opportunities that we're targeting as part of the PFS is to target the higher grade units of the deposit over the initial decades of mine life. Normally, mining open cut operations are constrained through strip ratio and mining costs. As you can see from the cross-sectional view here, one of the key learnings that we've found out through our test work, etc., is that it's very shallow. The mineralization's close to surface, and there's this ability to have a very low mining cost, which allows this high grading strategy, which is then one of the key aspects that we're going to draw into our optimized PFS. And we expect that the head grade of the mine plan as part of the PFS would be materially higher than our resource grade on this slide here, and therefore helps to bring down the capital intensity and operating costs. But I'll unpack that a bit more when we get to the PFS slide. In terms of processing flow sheet, we've been able to leverage the work done by Thacker Pass, being a similar deposit and the most advanced in the US. I guess we're often compared to WA spodumene producers, and I think the key bit is we plan to produce a lithium chemical. So we're a mine plus a concentrator and a converter, from a spodumene point of view. And the capital and operating costs really need to be viewed in that regard. Our process really consists of two key steps: beneficiation, where we wash the ore, drop out waste, keep the fine clay fragment, and then through an acid leach process, end up with a lithium carbonate. This process consists of proven technology, and this has been tested at a demonstration scale for half a decade by Lithium Americas. And the key point to ram home here is that we've now tested all but the last step to produce battery-grade lithium carbonate, and in our testing facility, or our the laboratory we're using in Colorado, we expect to produce lithium carbonate, battery-quality lithium carbonate in July. So we're right at that last step, and can't understate how much of a critical milestone this is from de-risking the project. Given that these claystone and sedimentary lithium deposits are emerging source of lithium, this is really going to provide confidence to us that we can produce the lithium chemicals to the required quality. I touched on some of the value optimizations a bit earlier. One of the key points I wanted to really make on this slide was that we appointed Fluor in the middle of last year. We've been very impressed by the work they've done today. They're one of the few groups that have a deep experience in this style of lithium deposits. They're the lead engineer for Ioneer at Rollo Ridge. They're also the QP, the processing QP for Thacker Pass, Lithium Americas deposit down the road. And on the back of the test work, the collaborative approach between Fluor and our internal team has really been the genesis of these trade-off and value enhancement opportunities. Primarily this high grading opportunity, but it's just not high grading. It's given the vast size of the deposit and shallow and soft mining costs. That's one aspect. But those high grade zones, which is sort of 60% of the deposit, also have more favourable metallurgical characteristics. So they perform differently under beneficiation. So we can take some amendments to that circuit to improve the recovery. In a similar way, they have better performance through the leach circuit. And so it was a no-brainer to incorporate these into the PFS and take that additional couple of months to get what we hope will be a compelling project for a range of key stakeholders to take and help convert future funding. We now expect the PFS to be completed in the final quarter of this year. As mentioned earlier, Jindalee has applied for two key US government grant applications. We had an announcement out a couple of months ago around this. Both applications are well advanced. We've been through a number of stages and received positive feedback thus far. One is with the Department of Defence. It's in the order of tens of millions of dollars. It's again to labour the point, they're grant funding. They're not loans. They're this non-dilutive source of capital. The DoD is really framed at advancing the project from pre-feasibility stage through to final investment decision and co-funding the funding commitment required there, being a feasibility study, a large drill program, and pilot scale test work. The Department of Energy, on the other hand, much larger amount in the order of hundreds of millions of dollars. It's more focused towards building a processing facility. It could be a demonstration plant or basically discounting the capital cost to build the project in a number of years' time. And like I said, they've been very supported by different levels of political supporters as well as strategic potential partners as part of these applications, and we hope to provide an update around a potential notification decision in the second half of this year. In terms of the capital raise we announced yesterday, there's three key elements. There's a placement primarily to a US institutional investor, Mercer Street and associated funds. There's an entitlement offer to existing shareholders of up to $3.1 million and a convertible note of $3 million to that same US institutional investor being Mercer Street. The structure of the equity component has been with two attaching options for every 2 shares held, a short-term option and a long-term option. And the rationale behind that really is to reward and incentivize existing shareholders to support the company, what we believe is, bottom of the market valuations with a very attractive priced option package at the short term with a year expiry that's just out of the money, and then a 60-cent option with a 3-year expiry to really leverage the upside for those shareholders who decide to support us through this next phase of work. In terms of the use of proceeds, primarily to complete the PFS, it allows us to continue, the high value US operations, our background studies, our community engagement, etc., and provides us, as I'll touch on in a couple of slides' time, allows us to really convert on a number of the things that we've been working on over the last 6 to 12 months, which are going to be, major milestones for the company going forward. In terms of the convertible, that tranche 1 and 2, the $3 million, that's a firm commitment from Mercer. It's only conditional on shareholder approval. Actually, sorry, there's $1.5 million that's not subject to shareholder approval. There's $1.5 million that is subject to shareholder approval, and we expect to put a notice of meeting out about a general meeting in the not too distant future. The subsequent funding phase up to an additional $9 million. That's to be through mutual agreement with Mercer and ourselves. The underlying rationale for that is that, we have a reasonable degree of confidence that we'll convert some of this US government funding. That requires, matched contributions. And, given the catalyst in the pipeline, this $9 million could be a less dilutive way to match that funding and provides us that sort of optionality. And that's the fundamental premise of that additional line. As I mentioned earlier, that the first half of the year has been relatively quiet from a news flow perspective. We've been busy working on our community engagement, our PFS, our metallurgical test work. Conversely, in the second half, we expect to convert a number of these key value catalysts, and this financing really provides a runway to achieve this. Top of the priority is the PFS. Over the last couple of months, we've been engaging heavily with local community and tribal groups, and we expect to be able to announce some agreements on that front in the next couple of months. We're in advanced discussions with US government agencies and US universities in relation to a cooperative research and development agreement. We're really excited about this. It's really a technical cooperation of looking at de-risking parts of McDermitt's flow sheet, and again, we hope to be able to announce something on that in the coming months. As highlighted earlier, this month, in fact, we hope to produce battery-grade lithium carbonate. I've touched on that, so I don't want to dwell too much more on that. We have been actively working with POSCO Holdings under a current MOU, and they've got test work underway at the moment in Korea, and we hope to provide an update later this quarter. And we're keen to sit down, from both sides are keen to sit down post that test work and post the PFS to decide what's next. Our MOU is a collaboration agreement. There's no first rights on offtake or anything like that. And certainly the intent is to sit down after we've both completed the different set of work programs and discuss what's next. Additionally, McDermitt has attracted a lot of inbound strategic interest from a range of different sort of downstream parties, be it OEMs, chemical companies, trading or miners. And really the key to unlocking that interest and the consistent feedback has been, we want to see the PFS because there's no real parameters in the market around production profile, cost, etc. So once the PFS is out, we intend to more formally engage with those types of groups. And as we allude to on this slide, we intend to run a process around that later in the year once the PFS is in the market. While we believe that Jindalee can unlock a lot of value on McDermitt going forward, given the size and strategic nature of this project, we believe bringing on the right partner with the complementary skill set, the technical skills, the balance sheet, but also plugged into the US battery value chain will be, key to accelerating the project development timeframe. I've covered off most of these slides, and I want to leave some time for Q&A, so I'll just skip over this one. Look, in terms of the benchmarking, McDermitt, as Mercer alluded to in the announcement around the capital raise, there's a large disconnect between the strategic value of this asset and where our current market value is, and this slide really talks to that. And I know Lindsay, you probably got a few perspectives on this one as well.
Yeah, look, I mean, I just, for those that have been shareholders for a while would know the history of this project. Jindalee acquired it, identified it, and announced 100%, we staked it outright. It was open ground. That was announced in June 2018. We then conducted our first capital raising since our IPO, which was in 2002. So 17 years on, we announced the first capital raising to do additional drilling on McDermitt, and that was priced at that was a rights issue, and it was priced at 30 cents. And at that stage, the lithium carbonate price was $8,300 a tonne. Since then, we've significantly, as Ian's pointed out, and significant de-risking of the project. From we've advanced the permitting of it. We've done a lot of technical work on the metallurgical side of things, and obviously the PFS is just about ready for completion and unveiling. And obviously in the background, we've had the US government increased focus on onshoring critical mineral production, including lithium. So a lot of funding available that wasn't available when we first started work on the project. And we've applied for some of that funding, and a lot more interest. Battery factories are being built through the United States, and they're going to need lithium. So the backdrop is a lot more positive than what it was when we first acquired this project and raised at 30 cents. And here we are now. The lithium price has gone up and then come down, but we've been, in my opinion anyway, oversold, and there is a huge value disconnect. We saw it in the MST analyst report. Their valuation was just over $2 when we had 60 million shares on issue, so pre this raise. So that's $120 million market cap. Compare it to our current market cap. So here's an opportunity for our shareholders to basically, and the lithium carbonate price is currently around $13,300, so almost double what it was when we raised at 30 cents back in 2019. So look, that provides a little bit of the historical background. And if you believe that this softness in the lithium market and negative sentiment, if you like, currently towards lithium stocks is short term, and you're taking a medium-term view and believe the thematic's intact, then there's clearly an opportunity here, and that's why it's being offered to our shareholders. And I'm obviously going to take up a significant, invest a significant amount of money, because I believe that we are bouncing along the bottom here.
Thank you both for your presentation, and let's move on to our Q&A. Our first question: the raising is a combination of a placement, a rights entitlement, and a convertible note. Can you explain the rationale for the convertible note?
Yeah, definitely. I think over the last couple of months, we've been exploring, different alternatives around, being able to fund us through the next stage of work. We've investigated, a range of different potential opportunities to source capital, being sort of straight equity. We've also spoken to streaming and royalty companies, and the feedback from the royalty companies has been, we want to see the PFS. Otherwise, it's the metrics just don't work too well if they can't see the PFS. The deal looks, very dilutive. And similarly, on an equity point of view, with the headwinds in the market, the pricing of a placement relative to the terms of the convert and what we've been able to achieve through Mercer, given that they've taken a very contrary view, a contrarian sort of investor, we further engaged with Mercer to sort of structure a deal where they take an equity as well as this convert, and then structure it so that our shareholders have the potential to take a large, part of the capital raise and be part of, helping support the company and getting that leverage to the upside. I don't know, Lindsay, if there's anything further you'd want to build on that.
No, Mercer Street. So, I mean, I know convertible notes for some investors have some investors are wary of them. They believe, and there has been a history with some groups that have put convertible notes investments into microcaps of the results not being positive for investors. But we believe that first of all, there's a floor on the conversion price, which a lot of these other funds, or companies, when they negotiated with these funds, weren't able to achieve. So we've got a floor on the price for a start. We also had a look at Mercer's track record of investment in ASX listed companies, and just a bit over 12 months ago, there's a company, a biotech company called Dimerix, who were in a similar position to us. Had been beaten up by the market, were pregnant, if you like, with lots of positive catalysts coming in the next 6 months, but needed funding to achieve those milestones. So we had a chat with the management of Dimerix, and they were very positive about the support that Mercer Street had provided to them, and the way that they had managed the conversion of some of the notes, etc. So their code, for example, you want to have a look, is DXB. And so that investment was put in place in May, I think, last year, at around 8 cents. Was the very similar structure to us, a placement, a convert, some short-term and long-term options attached to the entitlement issue, etc. Done at 8 cents, the headline price. Here we in May, basically they're currently trading in the high 40s, having been up to the mid 60s. And as I said, management were very complimentary about the way that Mercer Street had performed as a partner. And so, look, that was certainly one of the, if you like, the due diligence items that we ticked off. And so we were a lot more comfortable going with Mercer Street after having, had that background on them.
Thank you both. Our next question: the two classes of options attached to the placement and rights issue shares are interesting. Can you elaborate further?
Yeah, sure, Nicola. I think when we came around to structuring the equity component of this deal, the intent was really to incentivize and engage with our shareholder base to help support us through the next phase of work. We didn't really want to go with a large discount. We've kept that relatively tight, notwithstanding recent share price performance. And the option package is really structured with a short-term and a long-term option. Short-term options priced at 40 cents, so not that far out of the money on a 12-month time frame. And that's really framed against what we think are going to be major milestones for us over the next 6 to 12 months. We've spoken to them: PFS, test work, government funding, just to name a few. And so we're the expectation is with, an improving lithium market into next year, we could be in a much stronger price position, and that option will be quite valuable for existing shareholders, and also will help provide us, potentially some top up funding in 12 months' time. The long-term option, again, still, real attractively priced, 60 cents, and then provides exposure for participants over the sort of medium term as we hopefully commence a feasibility study and progress the project towards a final investment decision. Lindsay, again, I don't know if you want to add anything more on that.
Yeah, no, look, I mean, that's the long and the short of it. We wanted to make sure we provided as much incentive for our shareholders as possible, and aligned, the long-term option. If we are bouncing along the bottom or thereabouts of lithium pricing, and there is an uptick in sentiment in the next 12 to 18 months, that provides a lot of upside for our shareholders.
Okay, our next question. Any updates on Oregon? How are you finding the regulatory environment?
Yep, for sure. In terms of Oregon, now we've been very well supported by different levels of government with regards to our US government funding applications. In particular, we're supported by very high profile US federal senator, a Democrat, and just this week we met, when I was in the US, we met with the Oregon governor, and around discussing on how we can make this project a success for Oregon and the range of different community stakeholders. So we've found it very, very supportive, and I think because we're the biggest lithium project in the US and one of the only few major mining projects in Oregon, outside, say, Grassy Mountain, which is a gold project that's close to development, we're getting a lot of positive buy-in, is how I'd characterize it. And I guess related to that is to remind people is McDermitt is located in a very sort of historically disadvantaged area. It used to prosper under mercury mining. There's a mercury mine right adjacent to our claims. You can actually see in the background of the backdrop here. And so we've sort of seen this coalescence of two key drivers, being the the energy transition and the Biden sort of push in that regard, but then also the need for economic development in the region. So we're quite buoyed by the level of support we've got in Oregon. We're working through our exploration plan of operations at the moment, which is in NEPA, and the lion's share of the environmental assessment's done now. We hope to close that out in the next circa 6 months, which will allow us to do a much larger drilling program and have a much larger sample size to be able to do the next stage of test work.
Thanks, Ian. Our next question. The lithium market seems to be weak right now. What is the company's view on the outlook for lithium?
Yep, definitely very, very, very soft at the moment. That's been a result of a number of different factors. The run up in price over the last couple of years, delivered a heap of stocking in the supply chain, but also brought on a lot of additional supply from Africa amongst other areas. We're going through this tough period now where supply is rationalising. And the outlook is for the next 6 to 12 months is pretty soft, depending on which market analyst you want to believe. But fundamentally, almost all of them have a very positive outlook towards the end of the decade, and that's really where our focus is at. Our project, we haven't put out a definitive timeline yet. We'll provide some guidance as part of the PFS, but that end of the decade, just stepping through the natural milestones of developing a project of this scale is where it'll likely end up. And that's where we're going to be coming into a structural deficit in the market, into a market that is going to be increasingly bifurcated towards the Western sphere and Chinese. The Chinese obviously control sort of circa 60-70% of the lithium chemical market, and a lot of the engagement we've had on the US side has there's bipartisan support around decoupling that, and so being able to supply lithium chemicals in the US at the end of the decade when it's needed, that's top shelf for us.
Thanks, Ian. Our next question, do you anticipate any change in support for critical mineral projects in the US if there's a change in the US presidential leadership?
I think in a nutshell, we expect the direction of travel to be the same. I think there is bipartisan support for onshoring critical minerals. That the Chinese, the alignment around the need to deal with the reliance on China and other nations is completely bipartisan. It was Trump who kicked that whole show off. 3/4 of funding out of the IRA has gone into Republican districts. So the common theme we get from engaging with people on the state side is that the IRA is going nowhere. There will be, depending who wins, there'll be some potential changes in policy. There'll be a lot of noise, but the direction of travel, particularly around critical minerals, will be positive, and it'll just be about how it's incentivized rather than if. On the flip side, under a Republican president, perhaps there's some slowdown in EV rollouts and other things, but we think a lot of that's already factored into the market already. So we're not particularly concerned about that. We're obviously hoping to close out some of these government funding opportunities before the election, and lock them down. But otherwise, we'll be agile around what's in front of us next year.
Our next question, cash burn in the last 6 months since the last 4 million raise has been considerably larger than the previous periods. Could you please inform us what the last round of dollars has been spent on and how much of it has been used to progress the PFS?
Yep, that's pretty easy. It's basically all been used to progress the PFS. This is the first material study this company's ever done, and so the predominant spend has been through the PFS and the associated test work. We've obviously kept doing our background studies on site and our community engagement and whatnot, but the real uplift in spend has been driven by the PFS. And it's a bit to run on that, but we're getting to the tail end of that spend. So you'd expect the burn rate to drop off until we then proceed into whatever the next stage of work looks like.
Thanks, Ian. This is our final question for today. Are you in a position to expand a little on the government grant funding applications in regards to the expected structure and co-funding opportunities? And is the company considering possibilities in regards to potential strategic partners?
Yep. We're limited about the colour we can provide on the grant funding, but we have included some examples in our slide presentation around groups that have been successful in the past, which I guess informs our expectations. They're both expected to be co-funded. The Department of Defence one, which is going to be most critical for us in the short term to fund that feasibility stage that we talked about, would likely be 50% co-funded. Basically we get a feasibility study and associated work for half price. The co-funding commitment for the larger one is a bit more opaque, and we can't really provide much colour on that. But in terms of the engaging with strategics, absolutely. I think the prize A for us would be to get this Department of Defence funding, and then introduce a partner, whether it's a joint venture or equity offtake, or we've got to do a lot more thinking on exactly what structures work for us and potential partners. But in effect, if we could supplement the grant funding with funding coming in from a different partner to help fund what will be a reasonable commitment in terms of a feasibility study and associated work program, that's a really non-dilutive route for our shareholders, and that's like I said, the prize A for us, and how we're trying to target the funding to limit dilution and maximise the upside for our shareholders.
Ian and Lindsay, do you have any final comments?
Yeah, I've just got a couple of points I'd like to make for both existing shareholders and maybe investors that are viewing the webinar who aren't currently Jindalee shareholders. So if you have a look at the announcement yesterday, you'll note that Jindalee shares go ex entitlement on Friday, the 12th of July, so next Friday. So if you buy Jindalee shares between now and them going ex entitlement, you will be eligible for the 1-for-6 entitlement with the attaching options. And the second point is that for eligible Jindalee shareholders, so either existing shareholders now or those that buy before next Friday, the entitlement also includes an opportunity for what are called top-up security. So that means you can apply for shares in addition over and above your entitlement. So there are a couple of important points that maybe shareholders and investors aren't aware of. So I just want to draw their attention to that.
Thank you to you both and the Jindalee team for the update. This does conclude our webinar for today, and I thank you all for your attendance.